Recent developments in the cryptocurrency sector highlight an ongoing mix of regulatory shifts, technical patterns, and market sentiment that continue to shape investor outlooks worldwide. Starting with regulation, the United States Federal Reserve has reversed its previous crypto restrictions, now permitting certain banks, including uninsured state-chartered institutions, to engage more freely with digital assets, signaling a more welcoming regulatory environment. Meanwhile, the SEC has been actively cracking down, with warnings about the potential for an array of new ETF closures amid overextension in the market. Yet over 100 crypto ETFs are expected to launch by 2026, potentially flooding the sector with new products, many of which may struggle to sustain investor interest. On the legislative front, discussions among U.S. senators remain cautiously optimistic. A bipartisan Senate Banking Committee is deliberating on a comprehensive crypto market structure bill, focusing on key issues such as token classification and stablecoin regulation. Industry leaders, including representatives from Coinbase, Kraken, and Ripple, participated in constructive talks, but the bill's passing may only materialize after early 2026. Globally, regulatory clarity continues to evolve, with Coinbase achieving approval from Indian authorities to acquire a stake in CoinDCX, a move seen as a strategic expansion into Asia's promising crypto markets. Concurrently, Brazil's stock exchange announced plans to introduce tokenized assets and stablecoins in 2026, aiming to blend traditional finance with blockchain innovation. Market-wise, technical patterns reveal a market continually testing its resilience. Bitcoin, after a strong rally to near $90,000, experienced quick reversals and consolidations, with some analysts pointing to a rare capitulation signal, the RSI dropping below 30, that historically precedes violent rallies. Experts forecast a potential surge toward $130,000, especially if a long-term golden cross pattern emerges, hinting at a bullish trend reversal. Conversely, fears of a deeper correction persist if macroeconomic factors, like Japan's impending interest rate hikes, trigger volatility. Altcoins display mixed fortunes. Ethereum is showing signs of possible support around $2,860, with some technical analysts predicting a rebound to $3,150 to $3,200 within 2 weeks. Ripple, XRP, remains under pressure, recently falling below $1.90 amid bearish sector sentiment, though some forecasts target a recovery to $2.35 by year-end, especially if institutional inflows increase. Cardano faces support risks below 38 cents, with potential dips to 29 cents if bearish momentum intensifies. Notably, privacy coins like Monero are building momentum, with some analysts highlighting their 2-year parabolic trends as the best chart in crypto, capitalizing on rising privacy concerns and regulatory scrutiny of KYC policies. Overall, while market volatility remains high, encouraging signs